We've got our countdown closer panel. Let's mark it 6 minutes to go before the closing bell rings. Gerber Kawasaki CEO Ross Gerber is joining us along with the $161 billion man, Brad McMillan. We also have Phil Flynn back with us from Chicago. Brad, I'll start with you. It's really dangerous. As I've been saying, it's treacherous to try and trade this market, but are you doing so at all?
We're sitting tight. I mean, we see panic. Right now, I think we're getting close to the point of maximum panic. But if you noticed, the drawdowns seem to be getting smaller relative to where we were. Right now, we're hitting a point where we're about to say, I think, that, okay, it's as bad as it gets. The government's on board. Things are starting to improve. We're getting there.
I'm sorry. Go finish that thought.
Well, when you look at the maximum risk,
yes,
you have a risk now. You have a risk of the number of cases. Okay, that seems to have. It certainly hasn't peaked yet. We're going to get the testing, but right now we have the measures to control it in place. The economic risk is maxed out. Now the government is stepping in to cushion things. In other words, we know what to do and we're doing it. So now the downside risk starts to fade.
I understand. And Ross, when he talks about the downside risk fading, maybe today slightly, but all metrics have changed and we're in a very, very strange new temporary normal, let's call it that. What are you doing at this point? Because I know that you have loved certain stocks in the past, and you had put in a target for when you would buy, say, for example, a Tesla, which has just gotten crushed lately. In fact, Elon Musk was basically told by the sheriff in Fremont, where he has his operations in California, to knock it off and close your assembly lines, because that county, and certainly near San Francisco, everybody's shutting down at the moment. But do you like any prices here?
Well, I have not seen this kind of market since '08, and it's the gift can't even believe. I mean, what's happening now is everybody's running to the exit at the same time, and because of the ETF, generation, we're getting all sells all at the same time, all rushing through the gates of the door, and short selling. And what you've got is just a ridiculously dislocated market. But where we're seeing just the best opportunities of a generation are in things like the casino stocks. No question, hotels get bailed out here, airlines get bailed out here. Travel is going to be hit for a little bit of time. But when you look at MGM Resorts at $7, and we think the company is worth what it was, $25 to $30 or more. This is incredible if you believe that casinos will be back in business. I mean, everybody's like planning for October right now. October is going to be the best month in the history of America if we get through all this. But the bond market, I think, has the best overall risk reward. We're seeing corporate debt getting just pummeled, where I can take a safer position in the capital structure and get double-digit yields now on what we consider very, very safe investments over time.
Yeah, that makes sense. Phil, Robert Wolf, who was a contributor here and used to run UBS Americas, had said that any bailout package, because you just heard Ross Gerber list a whole bunch of sectors that are going to be bailed out, any bailout package must include strict covenants and all kinds of restrictions on stock buybacks, dividends for shareholders, and CEO executive pay. I mean, in the fog of war that we're seeing right now, we've got to be really careful that we don't bail out multimillionaire CEOs, that everybody has to take a hit, not just the American public. Am I correct? Is Robert Wolf correct?
He's absolutely correct. And I may even take it a step further. I remember back in the financial crisis, we came to the aids of banks. We bailed them out at the last minute. And I always thought, a few years later, the banks were making record profits. What about the taxpayers? I mean, the taxpayers did get the benefit because the global economy didn't fall apart and the country and the economy went back on. But what about those record profits? The U.S. taxpayers were investors in that bailout. So I'd like to see some type of structure with some of these businesses to give back some shares of stocks. And when the good times come back, and they will, that they benefit as well.
Yeah. Brad, what are you advising your clients right now? Have you proactively picked up the phone? I want to show you this. This is from George Walper over at the Spectrum Group. I get a lot of these reports. This one's entitled Corona Crash, What Advisors Should Be Saying to Investors Now. This came a week ago. This guy was ahead of the curve here. What are you telling your clients at the moment?
I'm telling them right now, you have a situation where nobody really knows what's going on. But we do know some things. We know what it takes to stop the spread of the virus, and we're doing that here in the country and around the world. We know what it takes to mitigate the economic damage, and as you were just saying earlier, the Congress is doing just that right now. In other words, the real fear here is that this is the zombie apocalypse, that this is 2008 over again. We don't think so. We're saying if you have a plan, if you have a portfolio built for the future to get to your goals, you should stick with that.
Got it.
If you're not comfortable with it, we can make changes, but we don't need to panic.
Good advice. Good advice. Brad McMillan, Ross Gerber, Phil Flynn, thank you. We close about 1,000 points off the lows.